morning, good evening, or good afternoon. I have zero clue what time of the day it is that you're watching this, but this is your weekend update and preview for the week ending October 27th. Leading you off here with the financialjuice.com website. Again, I've mentioned this and shared it for years. If you are trading from home with a PC or a laptop, or you have access to audio while you're at work, you will absolutely love having this site up. Have a tab open in your browser, click over here on Tick Strike, and you will literally be listening to the market move. High-pitched sounds like birds are chirping when the market's fractionally moving up. When the market rips to the upside, sounds like you just stepped on the tail of a cat. When you're moving down, little, low, kind of like a small beat of a drum. When the market dumps 10, 15 points in a matter of a couple of seconds, sounds like Tommy Lee at Motley Crue doing a drum solo. So use it. Anyway, this is a great website to have just to be able to keep up to date with what's going on. Over here on October 21, which was yesterday, Israel military, we will increase airstrikes as of Saturday. Airstrikes will target Gaza. Now, I appreciate nobody commenting about this in the general chat room. I have a lot of private messages going back and forth. I have people on both sides. And, this is not a place for politics. So keep that shit to yourself. Keep it to, your own private group of friends. Do not fucking post your opinion or thoughts about what's going on over there. You want to private message it? Got no problem with that. Over here on the couple hours later, no sign of Gaza ground war. Emergency aid truck convoy enters Gaza. So, we talked about this as a possibility for what could trigger peace in the Middle East. Over here on the left, you've got your schedule of what's going on this week, and it is zero, nothing, zero. Today, October 22nd, is National Fuck a Sheep Day over in New Zealand. Get a pair of big old boots, put the back legs of the sheep in there, and go have at it. They do it over in Wales as well, but Wales isn't considered a primary country. October 23, tomorrow, Eurozone Consumer Confidence Flash. That's it. Nothing else. On Tuesday, UK unemployment, UK services. We have our S&P Services PMI. That's it. On Wednesday, move this, stop scrolling it. Nothing. U.S. new home sales, crude inventory. After the market closes on Wednesday, it's Jerome Powell speaking. Thursday, you have the ECB, the European Central Bank's interest rate decision. Market has moved positively on ECB days. We have the initial jobs claims, durable goods, advanced GDP view, and then a couple of speakers, which they're not supposed to have because the FOMC meeting is the following week. Friday, ending here with Jerome Powell's favorite PCE, consumer spending, and again, Fed's bar speaking, which he's not supposed to be doing. But again, that's the end of your month. So schedule, as you already know, is, in fact, I'll go pull it up here for those that don't know how or where to find it. This guy is the best. There is absolutely no reason to try and find a better place. Earnings Whispers. And these are your earnings for next week. It's the biggest week of earnings. The biggest. On Tuesday, after the market closed, we have Microsoft and Alphabet. On Wednesday, we have Fuck You Facebook. On Thursday, we have Amazon. Now, I'm just naming these four because they are the big heavyweights of both the NASDAQ and the S&P. But you have a plethora of big names that are going to be reporting this week. So it's a big week. On the SPX, it's a rough month. It's the third consecutive red month. As of right now, we are down for a third consecutive month. Go back as far as you want to go, like I shared earlier in the week. You just don't see this shit. And when you do see it, it's insane rallies that come off of it because it's very common sense obvious. You're extremely oversold on your wider time frames. And I want you to keep that in consideration as well. It's 3 months. We've dropped down, and I'll show it to you in a minute, about 390 points, 391 points on the SPX. 3 months to do that. 3 months. We essentially have a double bottom here with 42.16, 42.23. But again, what I had shown you, and we're only talking about Monday, that's it, is how we have had 4 red closes in a row. And the entire year, I've stopped here for Q1 because I don't want to look back at all the other, I can unhide these rows if I want to. We have closed red 4 days in a row, multiple times this year. We've never had 5 in a row. I didn't look back at 2022. I didn't look back at 2021. I didn't look back at 2020. But I am looking here at where we are currently because this is the algorithm that we're currently trading with. And we have 4 red closes in a row. So thus, as I shared there for the view going into Monday, tomorrow, only Monday alone, is that the expectation without any shadow of a doubt, add in how oversold the medium to longer term time frames are, we're going to be closing green on Monday. Does not mean that you can go out there and buy calls, but it does mean that we are looking for a green Monday. Come over and share with you what was shared with me, which I kind of had in the back of my head, but I never actually took the time to go through my spreadsheet and accumulate the data as this had been accumulated and shared with me. Every Monday since we started the second half of the year has closed green. Every single Monday. Every Monday. So even within this 3-month drop that we are now in, 3 months, we've closed green every single Monday. A couple weeks ago on October 9th, we gapped down 19 points. We closed up 1%. We have closed green every Monday since the beginning of the second half. So again, it's data. It's just data. That's why we shared that trade to take for Monday. The credit that you were getting on the bullish puts, somewhere between $2.50, $2. A couple of you were able to get that roughly $2.70, $2.80 area. 3 consecutive minus 1% days on the SPX. Have not tracked this data. I have seen back-to-back. I'm only going to July here. Let's go ahead. We're here. Unhide the rows and start scrolling up. And we have had 2 back-to-back back in the middle of May, which was when the VIX got up into the 20s. And the very next day was when NVIDIA had come out and said, AI, right there on May 25th, plus 1% day, back-to-back plus 1% days over there on the SPX. Back then, after having 2 back-to-back red closes. Scroll backwards, and again, here we are going into March as we were producing the bounce off of March and the dip off of that bounce in March, right to that 39.05. 3 red minus 1% days, and then boom, a plus 1% day the very next session. 3 in a row again over here, going back to February 21st. The next trading session closed red. 4,001 we opened up, closed at 39.91, down 6 points from the day prior. This is in February. Completely different algorithm than what we're trading right now. So again, going back, and even here in December, 3 minus 1% days on the SPX. Next session, fractionally green, fractionally red, 39.41, 39.33. Bounce, 39.57. Opportunity there to be able to get out. And again, rather than wasting time on all of this as we're going down back into October and the bottom of last year, the point being is we have had 3 -1% days in a row. We just came through almost an entire month. We are 180, 190 points on the month. We just did 170 points yet last month or last week. 170-point move, and that was from the Tuesday high down to the Friday lows there at 42.23, right below the 200-day moving average. So the point being that is being emphasized is we are very, 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 very oversold and at a very critical place, not only on where we're at right now, but where we've been for years and years and years and years. So it is trending over there on Twitter like it does every single year. A Black Monday, Black Monday, Black Monday. Half of you weren't even alive in Black Monday. The other half of you that weren't alive on Black Monday couldn't speak English yet because you were still back in your own countries and hadn't moved to the United States yet. I was fucking 14, 15 years old. Didn't give a shit about what Black Monday was. And you need to remember back then as well, even though we were talking about the bond market, which is what's affecting our drop right now, it was human beings trading with human beings. There were no massive supercomputer algorithms that were trading back and forth in micro nanoseconds like we have today. It was humans. So take that with a grain of salt, do whatever it is that you want to do with the data, but that's where we're at. So I want to bring you in here really quick and start you with, where are we? Okay, we're on the QQQ. You know what? I'll get to the QQQ at the end. SPX, going wide, okay? Going to a wide view to give you a very clean look and perspective as to where we're at. The bounce off of October, boom, boom, 1, 2. Here was our wave 3, no question. The dip over here from, call it what, December into December, 336 points. The sell-off here from February 1, which is critical, and I'll get to this in a minute, down here to the March low, 387 points. And here we are, 4607 back in July. 3 months later, we're down 391 points. So again, this is 1 month. 1 month, 336 points. This is 1 month and 2 weeks, 387 points. This is 3 months, 391 points. Now, the point I make here about getting critical is this right here, this 41.95. This is the wave 1 that we're talking about right now. This is what most of us have. That's your wave 1 high, your wave 2, and this was wave 3. That's what most of us have. Now, there are some that have this as wave 1. Right over here. Right around that 41.60, 41.54, because this could be looked at as a, zigzag, double bottom, 37.64, 38.08. We're only talking about a couple of points. But either way, we are in a critical zone right here, this 41.95, 41.55 area. Extremely critical. You cannot break that and still have a bullish Elliott wave count. You can't. You can't break it. You break it, you violate it. So thus, the bigger, wider view starts to come into play where this was your A, this is your B, and that would make 4. This being your A wave to the downside, and your B wave should be coming because you are oversold, doesn't need to stop at 4607, can produce higher. But then from that, you're eating shit. And you're minimum coming back down below 3,800. So your window of why I was saying not yet. We're close, but not yet. Your window starts to open later in the week as we get into Thursday and Friday, and it closes as we have the FOMC meeting next week. That is critical. What is producing, okay? What is producing this move to the downside is the surplus and demand for that surplus in all of these bond issuances that are taking place, which are larger than they prior were. Now, if you recall, back here, when was it? McCarthy. It's up there above that. Unhide. McCarthy. Where are you, McCarthy? McCarthy, right here, May 17th. On May 17th with McCarthy, that was when he announced that they have a deal. They have a deal for the debt. They have a debt deal. If you recall, the U.S. was 1 day, 2 days from defaulting. So because we were in that area of default, they couldn't issue treasury bonds because nobody would want to buy them because didn't know we were going to be Argentina or we were going to be Canada. We had no idea. Now here we are, and we're into the ending of this traditional bond issuance period. Money is gravitating towards that 5%. 5% that you're able to get, 2-year lockup, 6-month lockup, 3-month lockup. It's gravitating over there to that 5%, which is why we follow the bond market. The dollar hasn't been as productive as it was. Now everything's right over here on TNX, not only on TNX, but also on TLT. TLT's broken all supports. I'll show you here on the maximum, right? We are at all-time lows over here on TLT. Now, granted, TLT only goes back to 2003, 2004. We're at all-time lows on TLT. And over on TNX, look at the same time frame, 20-week period, we're literally right on the cusp of 2007 when the financial markets fucking topped out, which was in August, a couple of months later. This is an incredible surge off of COVID. And the bond market here, okay, yields going back, deteriorating, getting a pause out of Powell, starting to talk about rate cuts, which I'll remind you when that comes, that's not bullish. You collapse this TNX, you surge SPX. It's just that simple. So again, for this week, zooming very, very, very close in, we have 0 gaps up above. 0. The only gap is that one that's unfilled from way back in September. For this month of October, we have nothing. I lie. I'm looking at one right here. I am looking at a tiny little gap right there from earlier in the week. Bear with me, but some of you who don't know how to draw, maybe you've just learned something there. You've got a gap right there above 43.64, right to that close there around 43.73, 9-point, 10-point gap. That's it. And here we are in a very aggressive move to the downside. I shared with somebody this, and that was, this appears to be a clean ABC. The 100 C equals A right there at 42.36. You've got your 200-day moving average right here, which we broke at the end of the day at 42.33. This number here, this 42.35, zoom you out, and that's where it's coming from. I will change it to white so you can see where drawings come from for those of you that want to get active and draw on your charts. Let's make it a 5. Boom, boom, and that was the 200 extension of that AB right there. You could do the same drawing here on the B move, and you basically came to the same number right around that 100 extension. So again, crucial couple of days to not break below this area here, this, what we're talking about is, and I'll remind you, there's nothing down here below it. Moving averages. 100, 50, 10, 5, 20, 200. There's nothing under here. Nothing. Some people would call that a bear trap. There's nothing under here. 41.9870 is sitting there. 41.95 is absolute violation zone. And then for those of you that remember, we have those big two massive 41.55 and 41.40s underneath that. I personally, from what I'm looking at from a chart point of view, have zero expectation that we are going to be breaking down into that area. The reason why is why I'll show you here. 90-day 4-hour, and I'm going to put on my big charts. Forget about what you're looking at up there. I'm specifically looking at RSI. RSI on the 4-hour is down here at 7. This is the lowest it's been in the entire sell-off. Oversold, you get bounces. Oversold, you get bounces. Oversold, you get bounces. We'll look at the NDX. Oversold. 7.4 is where we ended up with the RSI. Now, again, remember, we are looking at a 4-hour time period. We're not looking at a 1 minute, 2 minute. Come over here onto the IWM, your 4-hour, very oversold. Very oversold. Come over and look at the Dow. Index. Oversold. So everything lines up. And now you come over here to your hamsters. These aren't your running backs and your wide receivers and your Tom Brady quarterbacks and, your Barry Bonds, grand slam hitter lineups, all of that. That's the NASDAQ. The IWM, this is your hamsters. This is your bat boy. This is your locker room fucking massage therapist. This is the support team. The support team for the SPX. And looking at the move that you've got down here, since it came back up to above 20% from the all-time highs, which it failed back here in March, February, right on back up to it in July. Clean 1, 2, 3, 4 with a fifth trying to end where we are right now. And a massive buy divergence on this big, wide 12-hour period. You want to look at it from a daily point of view? We can do that. This is a daily, incredible buy divergence that you've got going on over here on the Russell, on the IWM. Thus, why the idea for the IWM calls was shared in the chat room. If you've never traded a ticker and somebody posts a ticker out there, don't go fucking jump on it. Use that chance to go and watch it. Buddy of mine, great story. We're down in the south of Spain. We just moved down there. We're living in Marbella. We're partying our asses off. This is back in the early 2000s. The house we're living in is next door to Robert De Niro's. We bring over a buddy of mine. I'm sorry if I offend some people, but if I do, it's a part of life. So get used to it. So a buddy of ours is over in England, South African guy, and he wants to come over and visit with us. He was friends with my buddy Travis. So flies over. It's on a Friday. Immediately drops his stuff off and fucking bam, he's out at the club. Out at the club. Go to a nightclub, his first night out in Spain, snorting coke off fucking chicks' tits, shots everywhere, ecstasy. Girl he meets in the bar goes, I want to fuck you, I want to fuck you, I want to suck your dick. They go outside the club. She starts giving him a blowjob in the street. He's enjoying the shit out of himself. He looks down and she's jerking off. She's got a dick. Point being, don't jump into a ticker you've never ever traded just because someone says, hey man, this is a good idea. So for those of you that I offended or you need to put earmuffs on, it's Sunday. You got time to go to church. The VIX. I kept talking about this trend line getting hit and how critical this 2102 is. Wild Friday, without a question of a doubt. Nobody, again, bond market, shit going off in Israel. 2102, trend line. Here's this trend line. Look at this trend line. You see that? Coming off where your highs are. Here we are back in this is September 2022. This is your October 2022. This right here is your March 2023. This right here is your June high 2022. I'll pull you out here and show you the wider view on it. That's where this stems from. This is February 2022. May, June, boom, boom, boom. We're right here. We're right here. And for those, and again, I'm not a trend line guy, but hey, guess what? How about Tesla? Bang, bang, bang. Bang, 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 bang. Result, 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 result. So, your VIX, my opinion, because this is a very critical couple of days, I think the VIX blew its load. I think you have yourself a bear trap set up, prime ability for the beginning of the end of the year rally. Not yet, but we're close. Come over onto the QQQ, and again, this QQQ, can't stop screaming about the QQQ. July top, your drop. Beautiful. Right to our fake print. Incredible trade when we were trading those 380 puts for August. This is what I'm seriously looking at. Here is our drop into options expiration August. And the move that came off of options expiration August up into the very start of September. A lot of you guys remember when you were looking at this that we almost, you look back on your SPX, we almost on that drop right there went back and completely filled the gap as we ran up to that 4,500 plus. Right off of that low there on August 18th, and bam, that insanely massive rally into the end of the month. Looking at something very, very, very similar where we're at now, with what I will leave you with is this double bottom view. So here, SPX, credit spread last week, fan-fucking-tastic. 233 points on the trade of the week, 233% trade of the week. $3.50 credit, $1.50 risk. You couldn't ask for anything better. 2 weeks ago when we were doing the other side, when we were doing the puts, if you remember off the jobs day, 42.85, 42.90, 316% on that one. Didn't have a trade of the week prior because the whole thing started out with the fucking Israel over the weekend. So did not have anything to be confident in. This week, I'd like to see how we go on Monday, and I'd be more than happy to put one out on Monday afternoon, maybe even smarter to wait for Microsoft and Google to go and report. But you guys can already kind of get a sense of the direction of what I'm talking about with those crucial 42.25, 42.16, 41.98, 41.95. They're all right there. Critical. We hold that. So looking at what you're looking at here, seeing as how you have the SPX double bottom, seeing as how we have our data that We just happen to have this habit of getting a green close on Monday. It's just a habit. You want to look at that habit, and we can look at it on the other side. On Tuesdays, going back here from here, we'll look at it from second half of the year. Green, green, green Tuesday, everybody red. Green Tuesday, everybody red. A green Tuesday. Mondays and Tuesdays are 2 different days of the week. Monday, big green day. Again, 3 -1% days. Starting to see where the odds are all stacked up on you. So this was supposed to be at the end, but I'll bring you into here. Here is your current view of the SPX. As you can see here, your daily is oversold, your big drop, your bounce, your bottom here at the very, very beginning of October. And here we are right now with the 200-day moving average. This is July 1 to the end of the year of 2022. Everybody knows you had your big drop there in September, your little bounce. The CPI report came out in the middle of October. We got our big gap down flush and the insane rally up into 4,196. Huge rally. Here's your bottom. Here was your bottom. 2021, your standard September sell-off, bang, your bounce, and then your double bottom, which was at the very beginning of October, your bounce, and then your failed sell down right here. And then we went off to the races into Thanksgiving. Your 2021, your top right at the beginning of September, your drop to 3209, your bounce into the beginning of October, middle portion, your drop, double bottom, end of October, right around Black Monday, because Black Monday is going to happen, and your absolute surge into the end of the year. Here we are in 2019. Your top, just right there towards the end of July, the bottom, back in August. Your bounce up into September, your bottom, essentially a triple bottom into the very beginning of October, zoom into the end of the year. 2018, the first minus 20% decline since the 2009 bottom. And everybody that does Elliott waves knows everything about this. Topped over here at 29.40.91, began the drop in the beginning of October. You had your drop into October, your bounce into November, double bottom, start of December. Trump announced a deal with President Xi, China deal, didn't matter. You had your ABC, and you got your 1, 2, 3, 4, 5 down into Christmas Eve and the day after Christmas, where we were minus 20% for 1 minute of each of those trading sessions. And everybody knows what happened in 2019. Come over here to 2017, and there was never, ever a sell-off in 2017. You fractionally had a dip over here in August, nothing but a little tiny dip into the end of October because it's Black Monday, it's Black Monday, it's Black Monday, and boom, into the end of the year. 2016, I want you to pay attention to this top here because this was your Brexit, your big drop into Brexit, boom, rush up to 2193.81. We were hanging around here. And right here around September 999, September 9, 2016, 2 + 1 + 6, 999. That was when XIs and I were trading, and Stanley Fischer came out with some comments after the open and said, yeah, things don't look as great as they do because everybody's fucked up. And bam, we got that huge drop there in September. Your bounce, here was your double bottom here in October. Then your bounce into the end of October, and then it was the whole Hillary Clinton falling down, fake ballots. Oh my God, Donald Trump might actually win, and boom, Donald Trump bottom, off to the races. To put that into perspective, I want you to see here 2015. You see here how you had your August drop. A lot of people call it Lucy Passport. You can go check it out. Here was your August drop, your bounce, your double bottom at the end of September. Boom, right back up here to almost Thanksgiving, beginning of November. And right over here in December was the very first time that Janet Yellen raised interest rates. You know what happened there in 2016, which you're going to see right here. This is your 2009 bottom. And you're moved to the upside as you moved. But where I'm concentrating your eyes on mostly is right here, how you came right over here into 2014, 2015, top there, 2134.72, had your dip in August, had your bounce into the interest rate decision, had your drop down here when crude oil dropped to $25 a barrel, the beginning of February 2016, and off to the races. And as you see here where you came right back to that 2134, another dip, Brexit, your bounce over it into August, your dip down under it, and then Donald Trump became president. What we're looking at here, that line, that 2134, that's your 161.8 retracement of the entire drop. So, charts are charts, people are people, everybody's got their opinions, everybody's got their ideas. One of you that I had a chance, I spoke with 9 people over the weekend on Saturday, only on Saturday. One person thought, you know what, man, fuck this. I'm smarter than Tim. I'm going to do a completely different trade. He wound up losing half of his account in a day. I know what I'm doing. I'm not going to be right every day. There's 252 trading sessions in a day. How the fuck am I going to be right every day? Think I'm fucking Cal Ripken? No, of course not. But I promise you, and everybody who's been around for a while will tell you as well, I'll be right 220 out of those 250 days out of the year. Take advantage of it. We've got a big week. Microsoft, Google, Meta, Amazon, Apple next week. Full moon over the weekend, and the FOMC meeting the week after that. We're close. We're really, really close. But we're not there yet. Have a great Sunday. If I offended you, I'll go wash my mouth out with soap.